Good morning. Good morning. How's everyone doing? Oops, sorry, wrong link. Whoops, sorry about that. My bad. Oh, my goodness. Sorry, everyone. I don't know why my cut and paste isn't working. There we go. A simple cut and paste. All right. Welcome, welcome. Can you guys see my screen? Seems to be working. Good, good. Welcome to our RTH session for March the 11th. Let's take a look and see what we've got cooking in the kitchen this morning. So our overnight inventory is long. It has corrected a number of times. Early in the overnight session, we did a look below and fail of the previous day's low. Um, Ignoring the news and the headlines and everything like that, common sense would say that we are going to go and test these lows at 5613, 5605, and of course 5600 is a nice round number. 5584 is a really big level for me. As you know, people who've been in my room, they know that's an older level and it was derived from 2020. And it's the bottom of a zone that we currently did a look below and fail of yesterday. Does that continue? Do we stay above 5584? Because the middle of the zone is around 5704 and the top of it is 5825 and a quarter. Okay, another big level is this 5620. It's a shorter term level. And we'll see if we stay above that. I imagine that we're going to go back and forth. I do have a feeling that we'll test yesterday's low. That's only a normal that's a normal thing to do when a market's in liquidation, is to test the lows as it looks for price stability. I don't trade the NQ. I have levels for it. And sort of the big level for NQ for me is 19,099 and a quarter. See if we stay above that. We're in a really big zone for the NQ. So as you can see, it's been dumping quite nicely. So that's what we're looking at sort of for today in ES. On the daily, we dipped under 57.80 to 54.28. The middle of that zone is 56.04 on the candles, and we've done a look below and fail on that in the middle. Now, where this whole move started back in September, that last quarter, going into the end of the year. So we're basically right back where we started. And let's see if we take out 55.16. If we do, that'll be some serious change. We've already experienced quite a bit of damage on the chart on the 1 day. People are not happy about it, and can't blame them. Let's look at the SPY levels for those who trade the SPY ETF. Yesterday we hit that 555.86, bounced off it. 565.2021 is the top of the zone that we're in. Let's see what we do today. Right, as you can see, all of the inventory is above 565.21, and that has to liquidate out. That will take time. So we're not looking for any magic rallies off, right away. When you drop a market on its head, it does take some time to figure it out. Okay. So let's go take a look at how we're going to trade this today. So inventory is long because the overnight point of control, which is where most of the inventory is priced, and the time point of control, because we were in distribution, we took all the cheap product underneath, I'd say underneath 5,600, whatever we picked up. We've been selling it over 5,600 all night, quite successfully. Decent volume, 386,000 contracts. We are into rollover now too, so a lot of old business is being finished up. We have responsive buying at 56.16, where the 2 half-hour bars are at the same place, and a little bit higher than M, a little bit higher than D. So the bid over time has moved up. So what does that mean in real terms for us as a trader? If you're short, right? If you're short and you're looking for us to break 5,600, this is practical application of market profile. If you're short and we can't take these two lows out, and we can't take the low of that period, that means that the bids are in there and the offer is going to move away from it like it just did. So if there's buying down there, you don't want to short into an area where everybody wants to buy, right? You want to short into an area where sellers are competing and price is going down, right? That just makes common sense, right? So that's how we use market profile or any chart really to help us get some common sense on how to trade, right? That's the whole thing. Trading isn't some sort of an esoteric, high functioning thing. It's where the buyers are, where the sellers are, and how can you do business, right? So VWAP is at 56.22. We've been above VWAP for most of the session. Corrections have taken us down to VWAP, right? So what happens over VWAP? Distribution. What happens under VWAP? Accumulation. These are simple business tenets, right? None of this is complicated. Analysis should be simple. You should not have a 15-page trade plan if you're a day trader, right? That is a waste of time, right? So inventory is above us, right? There's a bid under 56.13. I would say inventory overnight is long, my friend. I would say overnight inventory is long. What do you say, Jam? We are not trading the new contract yet. 50%, so half and half? Okay. I'd say given the circumstances that everybody has inventory above us, I'm looking for lower. Now, if you come and look at a 1 minute candle chart, there's something that's glaringly obvious. And that's, you see these bids here, right? Look at the candle, look at the bottoms. There's obviously buyers at 56.16 and underneath, right? Because if the market came to 56.16 and there were no buyers there, it would drop down and find buyers at 14, 13, 12. Right? That's what you got to do when you're a seller. Right? If you can't sell it at 18, you got to sell it at 17, 16. You got to put it on sale. You got to turn your inventory into cash. Right? You have to turn your inventory into cash. So let's see what happens. I'm short biased because I know the selling's not done, but I'm not going to be short biased into a large bid. Right? If we open and we can't take out, say, 56.13, 14, right? We're in the middle of the zone here and VWAP's on top of us. So what I'd like to do for a long is a look below and fail of 56.10 using the 1 minute candles. That would be my perfect trade. Okay. See, we're just dancing around that 16, 17. In such huge ranges, how do you define the edges? Okay, Shaz, you've been with me for a while. I know you were away for a while. Do you remember what you learned before you went away and came back? Okay, so let's answer your question. What are you looking at on my screen right now, brother? You got a TPO chart. What's next to it? Yeah. So for you, you get it, right? Just do exactly what I taught you to do, right? Wait for the look below and fail. In a market where inventory is overhead, that trade's going to come less and less. So what you can do, because you're a new trader, is you want to practice doing the look above and fail, right? Do that on the sim. Don't put real money on it because this thing rips, right? Now you know. Now this is where you use the peanut, right, on top of your head. You know there are bids down here. So if you were shorting 24, 25, 23, 22, you want to be covering the 18s because there are buyers at 16, 17 that are going to front run you, right? So if you are a short seller, you've sold something you don't own at 24, right? You put your stop up here at the top of that candle, right? Now, where should you expect to cover? Of course, you'd want to cover at 10, but 10. It here, they didn't. Here, they might. So this is how you have some situational awareness. Exactly. There you go. Right? Now, everybody wants to know how to capture that really big range. I'm not here to teach you that. I'm here to teach you how to make money. Because if you think you can capture a 170 point range with a small retail brokerage account, you're nuts. Right? So once again, I am a big proponent in getting paid, right? So the overnight high, a look above that and fail, that's a long ways away. What's a trade that is more practical considering that we are underneath VWAP? Right? Sure, if it gets to the overnight high and looks above and fails, that's a great trade. But the overnight high is up at 56.52. We're trading 56.16. So, right now, if you're short and it breaks under 16 and offers under 16, see how simple it is. Say you have a larger account and you want to hold that trade longer. Well, what you're looking for now is for the offer to come underneath that blue line and stay underneath it. That means that the sellers are forced to sell under 16 and a quarter. But if the market cannot offer under 16 for more than a second or two, what does that mean? It means there are buyers there that they're trying to get to pay higher, right? But if you keep banging on that level successively and successively, and if enough sellers show up and start to compete, the buyers will get smart and drop their buy orders like they're doing now. And the sellers will pull their offers if there's no competition. But if there is competition, there always is. If there is selling competition, if somebody else has contracts, guess what? You're putting yours on sale like they are now. You see that, Shaz? We saw exactly how to use the 1-minute chart to give real-time information that you can get actionable trading information from. You don't need a fancy DOM. You don't need footprint or bookmap or nose print or any of that crap. Just a little bit of common sense, right? And understand how the business works. And you trade in line with the business, right? Every trade we take is a business decision. There has to be an underlying business principle for that trade to work. Trades are based on too much supply or not enough supply. There's nothing else. There's no alien factor in trading. Now watch that blue line. Now we're going to see where the sellers are, right? So if the sellers have moved down from this 19 area to here, that wouldn't have happened. You see how we did, this is almost like a look below and fail of 16. It's not a trade, but it's market intelligence. So we sold down to 14 and we found, and when we put it on sale, what happened? You put it on sale, buyers showed up and started lining up. So they started to raise price, right? It's very simple, right? It's not easy, but it's simple, right? There's a simplicity in this business that if you keep it simple, you will be able to make a living, because then you'll be able to concentrate on your execution, right? If you can concentrate on execution, half the battle is won. The reason why people have trouble executing is because they've got 30 things running through their head. So you're always, oh, should I do that? Should I do that? So what's this doing? What's the VIX? What's the Twix? What's that? What's this? What's this? Right? And so no matter what kind of trader you are, you can use this simple technique that has been around for centuries, literally centuries. How did people trade with a golf pencil and a piece of paper? Right? There was no order flow software, not even 40 years ago, right? Order flow software means put up a bid or put out an offer. If your bid gets hit, you know the sellers, right? Keep it simple. It's a business, right? Learn when not to trade. That's another huge thing. So do you want to trade this? Hell no. You want to wait till the market looks below an edge and comes back above it to tell you that the sell order is complete. You want to trade from an edge where the market hits a level or goes above and comes back in, and you see that sellers are competing on the next candle. So you know you've got supply, you can short into that. Right? It's very simple. Now, if you work in the business, you don't complicate things, right? It's just unfortunately, there's so much bad information out there for retail traders. They overcomplicate everything, and you've got people telling people what to do who have no real world experience, right? And of course, hey, listen, I grew up in Saskatchewan, and we have a saying, if you can't dazzle them with your brilliance, baffle them with your BS, right? A confused person is easy to take advantage of, right? Keep it simple. That's why all we do in this room, and I invite people to come check us out. We got a 7-day free trial, a little bit of advertising, shameless advertising, right? We like to keep it simple. So when the business, but it's a dirty street fight business, that you have your wits about you. So you train yourself what to do when you get into bad trades, so you can get rid of bad trades quickly without hemming and hawing. The longer you take to get out of a bad business decision, the more it's going to cost you, right? And that's why we call it a market. It's just a market. you know The investment bankers create product, the salespeople sell it, the traders drive the trucks that contain the product to the storefront. It's going to be an interesting open. It's been a very interesting week. What I'm really interested in is when the end of this quarter shows up, curious to see what the 13 Fs look like and see who sold what. I mean, if you look at the volume, welcome to the folks on YouTube. If you look at the volume of the equities that have traded, right? You look at equity volume, look at Apple, Microsoft, Tesla. Look at the amount of volume that is trading in those stocks compared to the float. Tesla had a bit of a heavy day yesterday. 186 million. I always look at the volume, right? So sure, the stock came down. How much volume did it come down on? Apple traded 72 million shares yesterday. It's got 15 billion shares of the float. There's lower. See, we finally took out. Did you see that, Shaz? How we finally took out the 16s? Now, I'm short biased just because we're in a liquidation phase of this market, right? That's the only reason I'm short biased, right? But I'm also careful that I don't want to short right at the daily lows, right? Or right where the bid is. Now I'm going to look and see how well these levels do, looking for 56.10 and a quarter. See, and this is the problem, Shaz, with when you try and trade market profile by itself and you get these massive ranges. Look at the distance between your upper stop at 56.26 and a half and your lower stop at 56.05. That's a huge distance, right? That's why I use the 1 minute chart. Think about it like YouTube does have a delay, NFT Bandit. I'm going to try an experiment later on today where I'm going to do a Zoom and run a YouTube live at the same time and put the Zoom in the room and see if there's still a delay, right? That way I can do both, a Zoom for the room and then, broadcast it onto YouTube. I'm going to try doing that. Hey, Rudy, how you doing? We do. What's going on in the markets, folks, is what we call a margin sell-off, right? People who have bought stock on credit or have to liquidate that stock, right? COVID was a huge margin sell-off, right? When these markets sell off the way they do, it's because then you look at the companies that own stock that have paid for it in cash, they don't sell it because they have a 30, 40-year outlook, right? An investment outlook as opposed to a trading outlook. And they hold, because like look at BlackRock, look at Fidelity. These companies, they have like 1 billion shares of Apple, right? So in 40 years, they think Apple's going to be trading at $5,000 a share, split adjusted, right? They think Apple is going to make flying cars that are made out of soy that are electric. So you can fly from New York to LA and then eat your car and it's biodegradable. There you go, right? Twitch is a good platform and no delay. Thank you. Keep that in mind. Oh, yeah, we have trapped longs above 16, right? Because people were buying 16, looking for 26, 30, 40, right? Now they're starting to liquidate, right? This is the disillusion long, right? Ah, damn it. You sold it to me. You told me it was going higher. Now it's not. I'm out. All right. So now what the market is doing is it's finding that bid. The bid that was here at 16, where is it now? Right? Remember that TV show in the 70s? Oh, you guys are all young. There was this guy, Jacques Cousteau. He used to go on these ocean adventures. Now we're diving for the bid, right? We're trying to find where those big buyers are going to start stepping in. And we're off. Remember, it's going to be a bit of a volatile market. So please remember to just relax and make sure that when you are taking your trades, if you're wrong, admit you're wrong quick. Okay? There's no shame in being wrong, okay? When you're wrong about trades, they will tell you about what's going on in the market. Now I'm looking for a seller at 16. I don't know if I'd trade against it, but I just want to see if 16 went from support to resistance. I want to wait for that next candle to open. See, and then the top of that candle, that's where the sellers initiate, right? Now, if the sellers see buyers, they'll lift prices over the top of that candle. Watch. It's choppy, so it's this looks like a look below and fail of 10 and a quarter. And if you are long off the open, you're looking for a break of 16 quarter. There it is. And there's 18 and a quarter. Short 14 half. And my covers are 12 quarter. Moving in down to 11 and 3/4. Out one at 11 3/4. Flat. We do have news in half an hour. Thanks, Shaz. Good looking out. Now, inventory's above us. So I'm short biased, but I don't want to shorten the hole. So I'll let the large traders work out 56.10. How many people did we just trap short now in this green candle, right? We got to give them some relief. So we've got to offer under 10 and a quarter. With these candles being so big, I don't mind waiting for the next one to open. Because the ranges are so large, I can sacrifice the top or the bottom and try and get some of that trade in the middle, right? I'd like to see what happens at this stop. If we take out that stop, which we just did, how much buying does that bring in? And can we get a move back up over 8? Short 4 covering 1 3/4. I only just got one contract off. So what I'm doing is I'm scalping short because I'm unfamiliar with the order flow off the open. Also, the last couple of days I've been trading a little slow. So I want to get in and out quick. Looking for 10 and a quarter. If we can't get up to 10 and a quarter, the sellers are going to step in again, right? And price compete, and we'll go back down to 2 and a quarter. It's a little choppy here, so it's not clear, right? I like trades when they're very clear. See, the sellers stepped in, right? I didn't short that. I should have been shorting 7, 8 against 10 and trying to cover 2. Right? Watch the offer. The offer is the red line on top of the green line. As long as that offer is moving lower, you're okay and you're short. The offer sets the price according to the order flow that comes in. The offer is supply. Supply is either sold at a premium or a discount, right? Right now we're selling at a discount. There we go. Lower again off the twos. Getting under 98.99, I'd say 98. If we can stay offered under 98, look for 94 and a quarter. Right? We're just stuck on this standard deviation, and there's some buy orders there that they're going to fill. Now let's see how many buy orders, because if we take the top of the prior candle, that's significant. See, I like watching a 1 minute chart. A lot of people don't, but it gives you so much information on what's going on a minute by minute interval. See, look. So we had more buying than I anticipated at 99 and change, right? Almost back up to 56.10. I wasn't expecting that. Now, that's good that I saw that, because even though I'm short biased, I know we found the bid, right? So the bid's down here at 55.99, 5600, right? If you're long above 10, you're looking for VWAP, right? So if you're buying above 10, you're looking for VWAP, right? Long 13, out 15, right? See, I didn't have to buy 10 and a half. I bought 13 and I was out at 15. Clipped it for 2 points, right? Just, and no stress, right? I already had a heart attack at 44. I don't want to have another one trading retail, right? No drama. Like, okay, listen, if you have a heart attack and you're manipulating a stock from $50 to $300 and everyone's making $200-300 million, then maybe the heart attack is worth it. But, you know, it's a big score, right? But you don't want to have a heart attack when you're trying to make your daily wages, right? Hey, look, if I didn't laugh about it, I'd be dead already. The heart attack was, for me, that was paying my dues. Every trader, people would come and ask for jobs, and they'd go, "Hey, how many weeks paid vacation?" I was like, "Yeah, when you have your first heart attack, that's when you get your first vacation." It was not a genteel business back then. Still isn't. Okay, we're bidding before 11, right? You got to understand that if there's not a whole ton of selling, right? Traders, what are they going to do? They're going to use the fact that there's not a lot of selling to sell their position, right? You take markets up to sell, right? Because when you take price up, people follow it, like kids chasing the ice cream truck. That way you could sell more, right? It's just commerce. Now, if we take out the tops of these two candles here, let's see. That means we've cleaned out that 20 seller and we're looking for 24, then 26 and a quarter. What's wrong, Jam? right? We've got inventory. We've got to get rid of it before other people wake up and start selling, right? You always want to be first to the bid. Always want to be first to the bid. Right? So there's still some selling at 24.25. Now you guys remember after a sell-off a few months ago, this thing would just rip, right? Well, now we've got inventory clogged with product above us, and we've got to clean out that inventory. That's going to take some time. So everybody keeps asking me, is the bottom in yet? Is the bottom in yet? Man, if I knew when the bottom was in, I wouldn't be here. I'd swing by Miami and pick up Ray and Steve. And we go, hey, brothers, let's go on the big yacht, right? I would not be in front of a screen. Okay, so we lost the buying, right? Perfectly natural. Let's see 5610 if we can tag it. I'm looking for a nice rotation, right? When markets do this up and down, you know, you want to look for a nice rotation. If that rotation holds, you can trade it. And it's beautiful because you know where the edges of the rotation are. So you know only to transact at the edge of the rotation back into the middle, right? Instead of initiating in the middle, that's where you cover or you sell. Yeah, I don't mind. I had a couple of decent little scalps. And on weeks like this, into contract change, I won't trade size, right? There are no heroes in finance. I hate losing money unnecessarily, especially if it's because of my own stupidity. See, one thing I've noticed is when we do a look below and fail, right? And I'm setting up for a look above 10 and fail and short 8 down to 2, and it just catches you on that candle right here. And the sellers, maybe they'll sell into this one. Let's see. If they don't, it means they don't have to, right? If they don't have to sell it under 16, they won't. They'll sell it at 18, 19, 20. It is definitely worth taking your time and getting used to the temperature of this market, Jim, and everybody else. Remember, this thing trades on a 23-hour trading day, right? There is a lot of opportunity. There's a lot of opportunity. Just remember, admit you're wrong quickly, right? Hey, Zed, yeah, 10-point range is on the 1 minute chart. So when you're wrong, admit it quickly, right? There's no sense, you know, buying the guy at Citadel another dinosaur statue or whatever. Or what did he pay? Like $20 million for some dinosaur bones? We are paying for that when we're getting stopped out, right? He's got enough dough, right? Are we going to make mistakes? Are we going to get stopped out? Hell yes. That's just the business. That's a business expense. There's no reason to pay unnecessarily high business expenses, right? I mean, if you owned a business and you shut the business down at night, you turn off the lights, do things to save money. Here we go. Let's look for 26 and a quarter. Upper stops are 26 and a half. You notice the moves up really are happening after the completion of a large sell order. So the market moves up, backfills like it's doing now, sell down, sell down, sell down, and then it'll find a bid, move away from it quick, and then sell back down into it. So you can tell that they're still distributing size, right? They're trying to, because we have inventory from under 5,600 that they've been lugging all night. They didn't get rid of it all in the overnight. If I was more on the ball, I would have looked to short 24, 23 against 26, but I wasn't. That's okay. You will miss things. Don't dwell on it. Just use it to fine tune your execution. The point is you're going to make mistakes. You're going to miss trades, right? Things will be very obvious after the fact. That's just how this business is. Don't beat yourself up for it. Take that information, put it in your journal, and go, oh, I missed this, I missed that. So next time you're aware of it, right? You're not going to learn unless you're becoming aware of what's going on in your head. I prefer to do trading psychology in the moment by understanding the business and understanding, look, I am not a machine. I am going to make mistakes. So let's make the mistakes small ones, right? And admit we made mistakes quickly so they don't cost us huge amounts of money and endanger our capital, right? The other thing too is knowing when not to trade, right? In extreme chop, I would rather sit it out and let the large wholesalers work it out. Which gets me to the next subject of automated trading. So if you have wholesale, all this stuff is automated, right? Retail automation, I don't know anything about. All I know is if you are not consistently profitable, can you automate a process that you're not profitable at? I don't think automation is going to cure profitability unless somebody else builds the program. But if you don't know what you're doing and you try and automate your trading, um, you know what I mean? There's 26 and a quarter. And your next target would be 34 and a quarter. Now, a lot of people will try and buy this candle because they think it's going to go here right away, and it might. What I do is I always buy this candle and then I get stopped out. And the time I don't buy it, then it goes to 34. But that's okay. I'll wait for the next candle to open and see if it can stay above 26 and a quarter, right? And if it can, then I don't mind going long. Give it a little time. But if it can't get up over that, there's a blue line here for a reason, right? If it can't get up over that blue line, I know those sellers are choking it off, right? They're not letting it breathe. So let's see. Can we lift? See, look, they're right there again. So now if you're going long, like 28 and 3/4 on one, and I'm out at 31 and a quarter, right? So that's how I trade that. I just clip in, and as soon as I'm long, I put my sell order out, right? So the market just takes me. It's a lazy way to trade, but it works, right? And that was just one contract, right? I like to sell into strength, into chop, especially when market conditions are choppy. We should hold the 28s on a pullback. There we go. Right? And you take that again, right? So you buy 29, sell 31, right? Learn how to trade quick. It's not going to kill you. It'll also teach you how to think quick, which is not a bad skill to have in finance, right? Yeah, I have nothing against automation at all. I think it's great. Yeah, that's why I usually don't trade that much. And we don't really pay that much, you know? Here's the thing. What I like to do, like I'm scalping today to get a sense of the market. So I'm not looking to make a whole bunch of dough today, right? This market has changed and I need to get a sense of it. I might have to spend some money to do that. In business, that's called market research, right? I need to know what the hell's going on. And it's one thing to watch it on a screen, but it's another thing to stick your fingers in the dirt and see what's really in there, right? As an institutional trader, you're always taking test trades. That's how I was taught. Usually, when I take test trades, I take test trades with the micro. This morning, I took a couple of trades with the mini. So the commission really isn't that bad. So if you make 2 points on two minis, that's $100, right? Per one contract, you know, and then double it, that's $200. So your fees aren't that bad. You know what I mean? Now, if you're doing 20, 30, 40, 50 trades, yeah, it's it's going to add up, right? But it keeps you from over trading, right? Now, you guys complain about $4 a trade. Thank God you weren't my clients when I was on the desk. I would have given you a heart attack with how much commission I charged. Oh boy. So we got sellers at 30, right? We're going to come back down and test VWAP now at 1920. Just back and forth. Actually, the market's pretty orderly today. The candles are big. You know, it's a little bit more volatile than we like to see, or that we're used to, I should say, right? We're used to a very quiet creep up where they've just been marking up asset prices, and now, you know, a little bit of a yard sale. Now, what I'm looking for is, can we stay over 16? I don't know. Once again, I'm really short biased. I don't know. It's just me, but I think we're going to test yesterday's low. I think it would be natural for the market to test it. I know if I was trading size, I wouldn't want to put on a lot of size for a swing or a hold unless we tested the low. Yeah, that's right. And we have CPI tomorrow too, right? You know what? I'll take a 15-point rotation, 10 to 26. Look below and fail of 10, look above and fail of 26. It could do that for 4 hours. I don't mind. Then we can just trade it, right? See if it does that. And, you know, that's just looking above 26, failing, coming back down to 10, looking below 10, failing, going back up to 18. I'll trade that all day, right? It's a nice back and forth. See, there's that 10 1/4 test again. Right? I don't trust it to buy it just yet. Maybe I am wrong, and I might be. Won't be the first time, won't be the last. Right? I'll just wait for the next candle. Your human nature is going to fight with you and try and tell you to buy that bottom. And then here's where you're getting stopped out. That always happens to me, right? I always buy 12, right? I don't wait for the candle to complete and show me what the business is, right? It's like interrupting your girlfriend when she's trying to give you like directions, right? And you don't listen to her and you end up in the hood and they carjack your car. Sometimes you got to wait and listen. The market's trying to tell you what's going on. See, I don't trust the bids here yet until we are firmly over, I'd say 12. So this is keeping me away from the look below and fail right now, right? Hell, I'll even take 14 to 18. I don't mind that, right? I'll buy 14 to 18, 13 and a half to 15 1/4, right? It's a big range. So I don't mind clipping in and out for a couple of points, right? And as soon as I'm wrong, right? Like I just bought 13 1/4 and and as soon as it got down to the 12s, I was out. So I screwed up, right? I bought 13 1/4, right? And that'll happen. You just don't have the order flow to support your trade. And as soon as it got down to the 12s, boom, I'm out. Right? Maybe that trade will work later, but now I know that there's a seller right here. I know there's a 14 seller. So I'll just leave it alone. Right? Oh yeah, and there's news in 2 minutes. Right? So that trade was a mistake. Right? No situation, like I was not aware of the news, even though somebody had said it earlier. So you're going to make mistakes. Just admit you're wrong quick. You got to get past the gatekeeper at 14. No dice, not yet. How's the coin of bitterness doing? 80,900. Okay. Waiting for that sucker to get under 72K. I don't know if it'll happen. We'll see. Ugh. So, folks, we do the balance zones early in the day. I do a session at 7:30 in the morning UK time, and that's when I do the balance zones. And then I just keep them all day. It is, well, because you guys went ahead an hour, right? So that used to be 2:30 in the morning. I think it's 3:30 in the morning Eastern time. Not exactly convenient for folks. That it's recorded. There we go. There's B period. Look how wide the spread is. I ain't touching that. No, thank you. You can keep that for yourselves. Now, if we get over 10 and a quarter, watch out. That 14 sellers flushed. Let's see if they return. No, there's a bid. There's a bid. Boom, there's VWAP. Shook the tree really nice on that news. Looking for 26 and a quarter. 26 and a quarter. It's going to backfill now. I do not read the news at all. All I do is not be in a trade when there is news. I will trade the aftermath of it. I do not have my own algos, and I have just a regular fiber optic connection, so I am not fast enough to trade this. But this will bring lots of opportunity. Yeah, I am not a macroeconomic trader at all. I am an order flow and inventory trader. Right? I move product. That's what I used to do my whole life. Ask Grok. Ask Grok. It will know. All I know is that lately the macro has been changing, so the market's a little nuts. Right back down. Make sure you're using stops, ladies and gentlemen. Make sure you're using stops. Usually in these volatile periods, if it's tradable, I'll trade it. But what I like to do is I just like to watch everybody else run each other over. And then there'll be some nice trades. Careful executing at the extremes. Eh? So at the extreme end of this candle, if you're looking for a short, remember it's got to take out the bottom of that candle. And there will be some responsive buying. So if you're short under 5602, right? As long as we don't offer 3-4, you're okay. But if this thing picks up and starts offering over 3, you're in trouble. Right? Because a lot of people do hit the bottom of a candle. They miss this and they get it together by here. That's the way we are. So if you're short, that's okay. You can stay short as long as the offer is moving lower. Right? There you go. Right? But also remember, if you're short, put your buy orders in. Right? It's not shorting in Wonderland. Right? There will be other buyers other than you. So make sure you put your bids in so you can get paid. Right? If you were short 56.99, what's wrong with a 94.93 cover? Right? I'll take that all day. Right? For larger accounts, you're looking for 55.78. We're going to have to barrel through that 82 standard deviation first. And coming into 78 and a quarter. There's that previous day low. I told you we'd probably check it out, right? And it's not that I was crazy short biased. I just wanted to make sure that people's expectations for a rally, they have to be tempered, right? That was a quick look below and fail of 78 and a quarter. I didn't catch that. But that would have been a beautiful trade had I been fast enough to catch like 80, 81, sell into the 86s, 87s. That would have been okay. Middle of the zone is 94 and a quarter. And if you're long on that look below and fail of 78, expect some selling when you come into the 99, 5600 area, right around here. And if they don't sell into it and we climb above the top of that candle, you're looking for 5610. Nice rotation. Not bad. Not bad at all. On a larger time frame, is this a look below and fail of 5584 again? Well, that was fun. It's a fair chunk of distributed volume over 5616. So that's why we're running into resistance every time we get up there. Any questions from the room? You guys are quite quiet. Now tell me honestly, how many of you are really pissed off about the delay in Discord? We'll try that experiment afterwards. We have the Edgeful webinar, and then after that I'll run a Zoom and try and do this at the same time. Okay. The longer time frame in me was telling me to buy 5584, but I didn't have my act together. Okay. Yeah, AJ, but you guys are the ones who are asking the questions and that sort of thing. I haven't seen you in the coaching room for a while. We haven't done a one-on-one either. Reach out when you're around, man. I haven't seen you. No worries. It's good to see you. Yeah, we're trying something new, you know. Yeah, for those of you who are in the one-on-one mentoring, I haven't seen a lot of you guys lately. So either you're all making crazy money or you're busy. Reach out. I'm around. That's very good, B Money. You should be focused on your business, right? You should be focused on your business. And you should be ignoring everything that's written and just focus on your business. It's a good way to stay profitable. So the live feed is at 9 a.m. to 10:30 a.m. Eastern time. And then I do one for Europe at 7:30 a.m. UK time. Look above and fail at 56.10. Hey, maybe this is our rotation here, eh? 78 to 10. That'd be cool. Now, if you guys haven't guessed, I like a nice rotation. So you're short 56.07, 08. You know, you're looking for a 94, 95 cover, maybe 96. We start taking out the top of 56.02, 2.5. Be careful. Right there, the seller stepped in, right? That's what you want to see, right? That's what you want to see. The seller steps in at the top of the candle, right? The top of the candle is created by competitive selling, right? And there, if you were short 6, 7, 8, you're covering here to pay yourself on at least half of your position because that's the middle of the zone. If the market can't get to the middle of the zone, it's going to turn around and rotate up looking for a seller. A lot of folks are trying to call the bottom. Good for them. I wish them all the best. When you find it, give me a call. I'll be chilling. Right? You guys go ahead. Right? What do they say in New York? Go ahead. Go ahead. Right? I just gonna sit in the sun while you guys go find the bottom. All right? Try not to hurt yourselves. When you find it, give me a ring. I don't have to be first on the list, but that just call me sometime when you find it. All right? See, and that's why I would have covered that short. You see these two green little candles here? Well, that's responsive buying right at the middle of the zone, right? So look above and fail of 56.10 means you execute 8, 9 against 10 and a quarter, 10 and a half on your stop. You cover some at 2 and a quarter, you cover some at 97, 98. You'd like to cover at 94 and a quarter, which is the middle of the zone, but someone's front running you, right? So now if you were long 10 contracts, right, you could cover a few here. Where's your next bid's going to be at 55.89? But there's nothing wrong with a 56.07 to 55.96 trade, right? A lot of people are like, yeah, I just traded this and I made 4,000 points. Then I got into my Ferrari, got on my private jet with my wife, Morgan Fairchild. And yeah, we went to Monaco. Right? I'm a little bit more real world, right? Let's make a living, right? Let's make a living. Let's get paid. right? I call this blue collar trades, right? And what we teach in the room here at Micro E Futures is that these trades are scalable. So you learn how to do the look below and fail, and you can scale that up into a swing trading even, right? We had a beautiful look below and fail of Tesla. What level was that? I don't even have my chart book open. A little while ago. It's a great trade because it's based on the oldest principle in finance. When supply runs out, price goes up. You don't need to be a rocket scientist to figure that one out, right? Yeah, Morgan Fairchild it's an old reference. I'm dating myself, right? You guys can look her up. You have Google. It's a comedy skit from Saturday Night Live in the 80s. Right? We want to teach you how to make a living without you pulling out all your hair, right? That's the goal, right? Make some money, be happy, enjoy life. She was a very popular 80s actress, Walter. Now, if we stay offered under 94 and a quarter, let's look for 86 and a quarter, and boom, there it is. Next level, back down, 78 and a quarter. Not super ideal. What's that? What's not super ideal? FT. The trade or Morgan Fairchild? Oh, man. Listen, if you can't laugh in this market, what are you going to do? All I'm saying is you don't have to pretend to be Superman with these trades. Just make a living, right? Pay yourself. Don't blow up accounts, right? Learn how to use trading psychology in a practical manner. Trading psychology should be done while you're in the trade, not after you've blown up your account. Then it's useless, right? Learn how to do things in a practical way because none of this is random. They stopped selling under 86 quarter. They're lifting the offers. Where are they going to re-engage? Right. So the most important thing in trading is to have your setup and do business on your own terms while managing your risk. No PA Lab today. We're doing a Edgeful webinar with our CEO Andre, and that's at 11:15 Eastern. We'll do a price action lab tomorrow for those in the coaching class. Right. So remember to focus on your trade setup. If this happens, then I do this. If this doesn't happen, then I do this. Right. Set up your scenarios and wait to do business on your terms. What market makers are doing is they're just passing you the donut. They don't create it. They don't have anything to do with that. They are just moving order flow through their system. Order flow is just a fancy way of saying customers. right? Order flow is the flow of customers coming in to buy and sell, right? That's all it is. It's a marketing term that's been blown up. We are all order flow traders. We're all trading order flow inventory. Even if you don't want to say you are, because that's what moves a market. I'm not sure, all right. I do know that we do have a webinar today. Oh, okay. Well, all right. Well, if he is, then those of you in the coaching class reach out to me. We'll we'll do a Zoom when you guys want. Remember, I'm here all the time. You guys have to reach out. Let me know. I do not mind doing sessions. It's a little chop back and forth here now. Now, in the middle of a zone, I don't like to take a trade because I have no edge, right? I have no advantage here, right? Here, I'm just taking a stab in the dark, right? Here, I know if you look above 56.10 and fail, I know the sellers are forced to compete and sell product at a lower price. If we do a look below and fail, I know that the sell orders have completed under 78 quarter and the market's going to rotate higher. So I know that my edge is here and my edge is here. Here, I don't know where to put my edge, my risk, right? Market profile tells you very quickly where the inventory is, right? The blue stuff is the value area. That's 70% of where the inventory of the day is priced. So this way I can tell that there is inventory above us, so I can manage my expectations. Market up profile also tells us things about like structural things like single prints in a market profile, show us where longs are trapped and shorts are trapped. Also, something like a poor low or a poor high will tell you when there's competitive buying or competitive selling. Those are the practical aspects of market profile. Market profile is a wonderful tool, but while you are in a trade, you can only do so much analysis. Your analysis should be quick, which allows you to think and react. And your actions and your reactions should be programmed, almost like, say you're flying in a plane and the pilot comes on the thing and he goes, "Hey, folks, we're going to hit some turbulence. And I can't remember what to do. So I'm going to go look on Twitter and find out what this guy says what to do in turbulence." That doesn't really inspire a lot of confidence, does it? You should be trained when you're in a trade. If this happens, I stay in the trade. If this doesn't happen, then at this level, I know that the trade doesn't make any sense, right? You've got to use like common sense business, right? So if you're short and your sellers go away, why would you be short? If you're long and the offer is moving lower, like you would not go long into this sequence, right? Because the sellers are putting the product on sale. There's competition, so they're lowering price, right? If you think this is random, I've got some oceanfront property in Saskatchewan to sell you, right? See how the seller engages at the top of the candle, right? You can see how the offer has been moving lower from that candle to that candle. You guys call this trend down. Hey, Anne Marie, what the heck are you doing there? Come into the room. How are you? Good to see you. right? Look at them selling it. Okay, so we were at Saks Fifth Avenue. Now we've loaded up all those old cosmetics and we're taking them to TK Maxx, where my girlfriend will scour the shelves. See, we're putting it on sale. It's just a market, folks, right? It's just a market. Thanks. Well, I'm a fan of yours too, Anne Marie. It's good to see you. I have to get you on voice with me one of these days. Look at that. Now that's a sale. Look at the pop off of that standard deviation. You know what? If you're a new trader, spend some time watching just a 1 minute candle chart. Draw out your balance zones. We teach you how to do that in the room, right? And just spend some time watching. Because when you're watching a trade develop or you're watching a market, you can watch it with an open mind. When you're in a trade, you're committed to that trade, right? And it's like, it's got to work, man, right? But when you're not in a trade, you don't have any commitment to the outcome financially. So your brain is free, right? Which is a good thing. Right? A lot of big traders will spend time watching. Look how we go underneath 78 and a quarter, hit that standard deviation. The offer lifts to lure the buyers to pay higher prices. But if the buyers don't follow, the offer will move down and put the product on sale. See, and the nice thing is, once you get your balance zones working, unless you get a huge, massive trend day, right? And they'll still work. You just go 2, 4, 8, 16, 32, and it's just discount and profit. We are in the deep discount zone right now. And I think we're going to check out that previous day low. Right? There's our previous day low from yesterday. And I told you guys an hour ago, I'm not a told you so kind of guy, but markets are looking for stability. In order to find stability, those markets have to test lows, right? I want to see what's lurking underneath 71. Can't, and that's another thing. I don't know what's going to happen at a level. So I won't trade the level so I can keep an open mind, right? Now I get a sense of what's happening. Now I can use, if we do a look below and fail of 78, there's a trade for me. But right now, I don't like shorting into a previous day low. That's just me. But I'm ultra cheap. I don't like spending a lot of money on stops, right? And I don't like spending a lot of money on bad trades. So I tend to trade less. But that's because I was trained by vicious, vicious old men who are like worth hundreds of millions of dollars, but would like take the bus to work. They were so cheap. So that's ingrained in me to be cheap, right? Especially when I'm doing business. Now, what I'm doing is I'm looking to see where that seller is. Where are they lurking? I know they're out there. I know they're in the bushes, right? There they are, 78 and a quarter, right? But we still have 40 seconds in this candle. So let's see if that seller is still there. They're still there. And can we hold that previous day low? And at a level like this is like when I out with Omni's uncle and his father for dinner and the check comes. This is where you quietly disappear and let somebody else pay the bill, right? So as a trader, you want to let the large traders work out this level. So you get alligator arms. You don't reach for your wallet right here, right? You can do the look below and fail, right? See, they paid for it. Now I'll grab the tip, guys, right? You know, if you're fast enough, but there you go. There's the clean out. And that's the look below and fail. The next level will be 86 and a quarter. And you know where your sellers are going to be. So you can manage your expectations when you're long. and sell into the strength that is created by a momentary lack of supply because those sell orders completed. When they completed and somebody snatched it up here, look at the size, right? There's that rip up. Thanks, everyone. Drop by and see us at microefutures.com. We've got a 7-day free trial. Thanks very much. And come hang out with us for 7 days. I promise I will force you to learn more in 7 days than you will anywhere else. Thanks. Bye for now. Oh, and to answer your question about tariffs, uh, tariffs change the macro, and when the macro changes, large money sits on the sidelines and figures out what to do. Anyway, and that's why we have this opportunity for speculation. Thanks, everyone. Bye for now. See you tomorrow.